Hey everyone, Bob Kendall here. Just want to introduce you to our entire suite of products. We're giving a 33% discount. Basically it was $297 for the entire suite. Now it's $197 per month and you pay by a quarterly basis. And this is access to everything we do. Our professional software, which gives you the ability to do multivariate trading, will also give you the WaveTech platform, market grid numbers every day, as well as our stock screens that were developed by our institutional certified financial analysts. Everything we do is included in this package. So sign up by the end of the month and get this special of 33% off. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. On tonight's video, I'm going to discuss a couple things I think are important to understand about the infrastructure bill. But before getting into that, I want to review just the last couple days of commentary. And I've been talking about the market stalling 2 days ago, and it really has had a very bad breath, otherwise participation rate on a short-term basis. The intermediate models, which we will run tonight, this is Friday, we will run those tonight, have remained very bullish at around 72%. But the breadth on a short-term basis has continued to lag. And what I've been talking about this week, it looked like the market wanted to stall. It really didn't have a lot of momentum. It still doesn't have a lot of momentum in spite of the all-time new highs in the NASDAQ and the S&P. We're really not seeing that VIG come into the markets. And this is somewhat typical, and I addressed this a couple videos ago, that a lot of times we'll get this very narrow breadth in the market. All of the top end stocks that drive the indices are continuing to drive the indices higher for the most part. We're seeing the S&P move up yesterday 0.6, NASDAQ up 0.7. We also saw the Russell come back into favor. It was up 1.3%. As we come into the end of the week, I really don't see any further momentum. What happened yesterday was the S&P gapped higher right out of the gate with all of the talk of the infrastructure deal. Now, the administration made a big deal that they have a bipartisan deal. They were flaunting their entourage of senators that were going to pass this deal. But there's a couple problems here. I tweeted out yesterday that the devil is in the details, and that is always the case. And what we're seeing in this bill, it's not any different than what we watched last fall on the stimulus and all that. The same people that can't make decisions are once again confronted with making decisions. And there's a lot of opposition to this bill in spite of the so-called deal that they got today. The realities are they're not even really sure how they're going to pay for it, but there was one statement that Biden made that tells you everything you need to know about this deal. He said he will not sign the deal if it doesn't have the reconciliation, or otherwise all the stuff that the Republicans said they don't want in there has to be in there or he won't sign it. That's really what he was saying. So the fact is they said they have a deal. I don't think there's a deal. I hate the fact that we have to watch what these politicians are doing or trying to make a decision and all the rhetoric and all the noise that's going to come around this. We went on with that for months back in October. It's very frustrating to go through that. In last night's video, I showed you that the market's been flat virtually since March. We get slightly new highs and it comes back in the pattern. For the most part, it's been 41.80 in round numbers to about, now we've got 42.60. But if you averaged all those numbers out, we're probably 42.20 or so, something like that. The point of discussing this tonight is the algorithms actually drove the markets higher right out of the gate. After the first 15 minutes of trading yesterday, the market just went into a flat grinding mode, maintaining the higher end of the range. There was no selling, nothing going on there. And the algorithm just kept grinding and trading hands all day as the market went absolute sideways for the entire session for the most part. I think the range was around 12 handles was the extreme from high to low during that period of time. So it was a very tough market to watch during the day. In yesterday's video, I discussed the fact that I thought the claims would come in higher, and they did. They were at 411. The continuing claims were down to 3.3 million, And that's been the range, around 3.3, 3.4 to around 3.8. Still no material. My magic number is 3.2. Below that, I'll talk to you about what I think that means if we get below those numbers. For right now, those numbers weren't really material. We also had the GDP come out yesterday exactly as it was expected at 6.4%, and the deflator came in exactly as expected at 4.3, and I discussed if that came in hotter, that would mean something. Well, it didn't. Today we have PCE prices coming in. They're expected to show a 0.6 increase. If they come in a little hotter, if we saw a 0.8 like we did in the producer prices last week, that might have some effect. Also, we have personal income expected to be down 2.5, while the expenditures are expected to be at 0.3. And those numbers will also have an impact depending on how they come in. I don't really have a feeling about how they're likely to come in. But the PCE price number, it will be probably the most watched out of those three metrics as we come into Friday. Similar to last night, I'm not going to review the database as I have been. We're basically still very flat. We did see some positive traction last night. We had 787 buy signals, 266 sell signals. Now this is in a database of 16,400, so these are pretty immaterial numbers. We had basically an 8-to-2 ratio, but it wasn't material or large enough to really have any effect. We went from around a 32% and change bullish percent to 33.81, so very little going on there. And today is Friday, so we're going to run our intermediate models, and those are going to be watched really close. I think a lot of symbols are getting a little long in the tooth, and we might see the intermediate database drop down a little bit, maybe below that 68% level. It's currently at 72. I'll be watching that. I'll talk about it on Sunday night. Overall, as we go through this week, a positive week. We're at all-time new highs, as I mentioned, in the S&P and the NASDAQ. The Russell is not too far away, and the Dow Jones has got a ways to go to actually do that. I don't think anyone really watches that index. There's some people that do. I haven't for probably 30 years. As we come into the close this week, we're likely to get an all-time new high closes. We're continuing to move this market forward, and it's just a very grindy market, but a very narrow breadth, especially on the short-term basis. Let's go ahead and look at the charts and see how they're set up for Friday. As I review the S&P futures, we're up two handles right now, 42.58. As we review the PPMs, we're just not getting any acceleration in this trend. And even though we were able to make an all-time new high, we're not seeing that vig or that acceleration in the markets. And that is somewhat concerning, along with our database that continues to be down at around 32% bullish on a short-term basis. There's just not enough stocks driving this market to really give it a robustness that you would need to accelerate from here. So I think we're likely to fall back in the pattern over the next couple of days, looking at a very flat market here in spite of the last 3 days moving up slightly in the pattern. As I review the market grid for today, we're looking at an S1, possibility of an R2. Overnight so far, we've seen R1, 42.63 is R1. The high's been 42.64.25. Last trade is 42.58. It's possible that R1 will hold, and we could see a decline back toward S2, 42.41. I don't have big expectations for a move, but because of this lack of momentum, we could trade all the way back into these moving average 42.25, 42.15. I just don't see a big acceleration or breakout out of this pattern. As I review the SPX, in yesterday's action, we traded up just above R3, almost to an RTX number. 42.77 was RTX. It's interesting here on the cash, we're getting this cluster of cycles coming in, and I'm trying to figure out what they mean. We had a cycle a couple of days ago. Now we have another cycle. I think the reason why they're coming in is because of this elongated sideways choppy range, and we're picking up some lows and highs. The way this indicator works is it looks for clustering of multiple Fibonacci cycles hitting at the same time. So it has to have 3 or more cycles, then it will produce these dots, which will suggest that there's a significant event happening here. I don't have a high level of confidence on this, but today will be another cycle. It's possible it'll be a cycle high, and we'll trade down into these moving averages I mentioned in the futures back towards the 42.34, 42.22 level. But we look at the market grid for today, we also saw a sharp contraction, which usually suggests there's some potential for the downside. We're looking at the possibility of an R1 S2. R1 is 42.71. That would be a new high in this pattern. That's certainly possible, but my expectation is now for an R1 S2. If we do break out, then use these numbers to guide you for as far as intraday trading goes. One thing I want to point out on the weekly market grid, it is highly likely we're going to get an RTX sell signal, which means sideways to down for the next week to 2 weeks. For anything over 42.33.21 today will give us that signal. So I'll be discussing that on Sunday night. Next market I'll cover is NASDAQ. NASDAQ is up 6 handles, very quiet overnight, trading 14,360. We look at the market grid for today. It's a very narrow range, but the expectation would be for a 14,389. The high so far, 14,375, and 14,318, 14,279. As I've talked a lot this week, this 10-period moving average is the critical level in this pattern, and it has a ppm value of 0.26, which suggests there's only a 40% probability for the market to close below that level today. So the expectation of moving down to the S2 is fine in the pattern, but the probability of closing under that 10-period moving average is very low. So expect to see the market just grind out. But just like with the S&P, we have a little better numbers here from a trend level standpoint, but the PPMs are not accelerating. We're seeing PPM 3 trying to pick up some steam here, but for the most part, we're just seeing this grinding, what I often refer to as a creepy crawler market. It just keeps crawling up along the demand line, which right now is that 10-period moving average at 14,666. Well, the one thing I want to mention, there is a key level to watch for today's close, and it's on the weekly chart on the NASDAQ futures. The RTX number is 14,370. If we happen to close over that, just like with the S&P, we will have an RTX sell signal suggesting 1 to 2 weeks of sideways to down market action, and that is being projected on the indicator. I will update this on Sunday night. The final market I'll cover tonight is gold. Gold is trading in an absolute sideways range. I do like this pattern that's set up. It does suggest that the market is going to challenge the 10-period moving average probably early next week. The PPM 1 is actually turning up. PPM 2, some of this downward momentum is starting to bleed off. It'll take a couple more sessions. The 10-period moving average, which is currently 1802, is declining about 10 handles per day. So it's going to be the 1790 level. So that will be your resistance as we come into early in the week. You can look at the market grid for today. RTX is 1795. Very quiet session. We're trading at 1780. Heisman 8120. R1 is 1781.30. So it's smack on the S1. 1772, the low 1773. So we've had an S1, R1. I suspect it will stay somewhat quiet, but I believe we could move up to at least an R2, 1786, the potential to going up to 1790, but I don't think we'll get over 1800 for the week. This will complete the video for tonight. I want to thank everyone again for watching the channel throughout the week, participating in the live stream. I would still strongly suggest you go back and watch the live stream from Wednesday. There was a lot of good material there. Thank you so much for participating in this channel. We'll talk to you on Sunday night. Have a great weekend, everyone. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.